This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. I'm John.
And I'm Mary. We're your smart friends on the go, cutting through the noise to get you the facts that actually matter. It's Friday, June 5th. Let's get into it.
Mary, the headlines are obsessed with the artificial intelligence revolution. But I'm seeing a major shift in the boardroom. The runway is getting shorter.
Exactly. CFOs are suddenly pulling the brakes. About 25% of planned artificial intelligence spending is being pushed to 2027. This isn't a tech failure, John. It's a show me the money moment.
Right. It's a crisis of measurable value. Companies are tired of paying for speculative pilots. They want systems that actually boost the bottom line today.
It comes down to a simple change in incentives. In a world of tightening trade routes and sanctions, like what we're seeing around the Persian Gulf, companies aren't looking for moonshots. They're looking for operational certainty. If you can't prove the return on investment right now, the money is gone.
It's the shift from the era of growth at any cost to the era of prove it or lose it.
Let's move to the global overview.
Starting with Asia, Allianz Global Investors is acquiring URB's asset management arm. It sounds like financial housekeeping, but it's actually a defensive play.
It's all about the map. Geopolitical friction is rising. Global firms want to be deeply rooted in local regulatory systems. Think of it as a hedge. When the trade currents get choppy, you want to be sitting in a sturdy, local boat.
Then there's the situation in Argentina. Javier Milei, the president, is hitting a wall. He built his brand on a digital megaphone, online feuds, and high-engagement social media posts.
But he's learning a hard lesson. High engagement doesn't mean high conversion. His online popularity hasn't translated into the boring, patient work of passing legislation. He's treating politics like an influencer brand, but governing requires building bridges, not burning them.
Which brings us back to the artificial intelligence mirage. Wall Street is still pricing in massive growth, but the actual productivity gains, they're thin.
It's like the pre-synthetic rubber era. Capital is flooding in based on a promise, but the output isn't there yet. If these tools don't lead to hard margin improvements, meaning actually making things cheaper or faster, those trillion-dollar valuations are just speculative bubbles waiting to pop.
And finally, the currency markets. The Japanese yen and the Korean won are struggling. It's the gravity of the dollar.
Exactly. When there's uncertainty, global capital flows toward the United States dollar because it's seen as the safest bet for yield. It's a relentless pull that even major economies are struggling to fight.
Let's pivot to the European perspective.
Some fascinating news on the innovation front. Researchers found that bumblebees are using tools to solve complex puzzles.
Which sounds cute, but it actually changes how we think about intelligence. It proves that cognitive capacity, the ability to plan and solve problems, is scattered across nature, not just in humans or primates. It challenges how we manage resources and solve problems in biomimicry.
Speaking of biological smarts, there's a breakthrough in bone regeneration. Scientists are using keratin from sheep wool to help bones heal.
That's a huge resource shift. Currently, hospitals rely on expensive, proprietary synthetic materials. If you can swap those out for abundant, renewable sheep wool, you've just structurally lowered the cost of surgery.
It's an efficiency win. Anytime you can replace a specialized input with a commodity input, the supply chain gets more resilient.
And on a tougher note, we have to talk about sanctions. The United States has updated sanctions on Cuba, and it's triggering a swift retreat of European capital.
It's a cold calculation. As of today, any company operating in Cuba risks being cut off from the United States financial system. For a multinational firm, the math is simple. The access to United States dollar hegemony is worth way more than the market in Cuba.
So, they leave. No drama, just a balance sheet decision.
It proves that access to the system is the ultimate leverage.
That's our show for today.
The overall temperature? We're seeing a cooling of hype across the board. From artificial intelligence spending to international expansion, the everything everywhere strategy is being replaced by a laser focus on operational margins and risk management.
The world is getting smaller, tighter, and much more focused on the bottom line. Catch us next time for more.
Stay sharp.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.